Hey there, it's Mike Rains here with Remax Airsoil here in the Orange County market of California. And today I wanted to show you a potential opportunity really if you're a buyer in this market and if you're a seller in this market. It's kind of tough, right? So you've got interest rates that are going up and have been up for a little while. So we're at kind of around that 7.25% interest rate on a 30-year fixed. So if you're a seller and you are getting offers from buyers that are having a hard time wanting to be able to pay your price as well as being able to afford it at the same time. So today I wanted to introduce to you something that's called a 3-2-1 buy down and explain a little bit of it. And I've got my screen already being shared with you right here. So I wanted to share with you about what that kind of looks like in the breakdown, because what's happening is that, as let's say if you had $1 million home for sale and for some reason you're not getting offers on the property and it's just been kind of sitting there, which sounds like pretty rare in this market where we have very, very low inventory. There's only 2,300 homes in all of Orange County available. But if you missed it on price, that's what's happening, is that homes are sitting a little bit longer and it's taking a little bit longer. So unless you get that cash buyer that comes in and wants to pay your price, typically those guys are going to want a discount. So on $1 million sale, they're going to want it somewhere around 9.25 to maybe 950, and that's the cash discount, right? They always want a discount, but you got some other buyers that are interested, and so they're more apt to pay a little bit more for that property because they've been renting maybe for a while, and so they are interested in buying a place. But they're also struggling to try to make it work financially. So this is a great opportunity, and I wanted to kind of, as best as I know how, to try to explain to you what a 3-2-1 buy down looks like and what it would cost the seller, because that's who's going to be asked to pay for it, or maybe even negotiated combination if the buyer has a little extra cash that they can be able to put towards it. And the difficult part is that they typically have 20% down or less, and that's all they have, and a little bit of closing costs, but that's all they have. So in this scenario that you'll see under here, we've got a loan amount of $800,000, which translates to $1 million purchase price, putting 20% down. I'd put 7.25. It's bouncing around, but let's say today's rate is 7.25% on a 30-year fixed loan. So number of payments is 12 months, obviously, in a year. And the monthly payment at that rate would be $5,457.41. And you have a total of 360 of those payments. And so what a 3-2-1 buy down does is that buys down the interest rate in 3 years. So the first year, the interest rate is 4.25. Then it goes to 5.25 the second year. And then the third year is at 6.25. And so your payment is still the same based on the original loan amount and the interest rate, but now it's getting divided up on who's paying for it. So at 4.25%, the buyer's paying $3,935.52, and then there's a seller subsidy of $1,521.89. 12 of those payments, so the seller's subsidy would be $18,262.68. Then the second year bumps up to 5.25. So the same payment is existing, but $4,400. Now the buyer's going to absorb a little bit more, about $500 more in their payment. And then the third year, just to save time, goes up by another $500. So they end up going from $1,500 that the seller's contributing down to $1,000, down to $531. So the total buy down cost for the seller is $37,120.08. And so why am I telling you this? Number one, it would make a buyer a heck of a lot easier to absorb being able to get in at 4.25. And then as their income increases, they're able to absorb the jump from $3,900 to $4,400, right? And then by that time, maybe the interest rates are starting to lower down. And then by year number 3, they're back up to 6.25 and $4,925. At that time, 3 years from now, there's going to be a good chance that they're going to be able to refinance that rate back down into the 4s. That's what they're anticipating anyway. So by the end of 2024, they're anticipating the rates to get down into the 5s from where we are here. And then after that, down into the 4s following. So why would you be interested in doing this as a seller? Well, if you're at $1 million and you're not getting anyone to make an offer on your property, your listing agent is going to be talking to you about the market, about what's going on, and then they're going to share with you about doing a price improvement to that. And sometimes people do it in stages, so they'll do it at like $25,000 at a time. Maybe even, if you have to sell that property, you might be like, you know what, we missed it. And so we should really be priced at $950. So you make a $50,000 price drop. And what I'm suggesting to you is that instead of doing that $50,000 price drop, or at least a combination of that, maybe you consider offering a 3-2-1 buy down to one of the buyers that has been circling the property, but they just can't seem to make the numbers work for them. Offer them some kind of a rate buy down. So the first scenario is the 3-2-1. But then the second scenario here is a 2-1 buy down. So maybe you don't want to do all 3 years. Maybe you just want to do 2, and it works exactly the same. It drops it from 7.25 to essentially 5.25 for the first year, 6.25. Total outlay is $18,857. That may be one that you would offer the buyer to be able to help them be able to afford those initial payments at $44.17 as opposed to the original $54. So you're saving them $1,000 a month for 12 months, and then you're saving them $500 a month for the remaining year. So altogether, they're saving quite a bit of money as well. And so that might be able to help you get your property sold. So that's what I was looking to share with you today as an idea to try to help you be able to get that home sold, because that's your goal. And that's what you want to do, is get that property sold for the highest amount that you can. So if you're seeing this and you're a seller, talk to your agent. If you don't have an agent yet and you're considering selling a property, I'd love to talk to you as well. But talk to your agent about this either 2-1 buy down or 3-2-1 buy down as a possible bullet in your vest, so to speak, to be able to get your property sold, and for the highest amount that you can. Because let me tell you, there's enough buyers out there that if you get 2 or 3 buyers that could really take advantage of this, they might be willing to pay a little bit more for that property than the next guy, because they're going to absorb it into the payment, but they're getting help with that from you. So rather than drop it down, maybe they're willing to pay the $1 million price instead of dropping it to, say $985 or even $975 and still doing something like this. So that's all I got for you today. If you have any questions, reach out to me, send me a message in the link, or you can email me at mike@mikerains.com. All right. Have a great day.